Hey, this is Sasha Evdokov, and thanks for joining me here for another stock trading and educational video. Now today, what I'd like to do is cover the 6 common inner game stock trading problems or mistakes. So there's some things you need to be aware of when you're looking at being a successful trader. Some of it is the outer game, which is external to you, right? So it's external in the way that learning about charts, learning about fundamentals, reading the balance sheet, making the trading decisions, the plan. But then there's also inner game, the psychological stuff, where it's about patience, it's about being disciplined, it's about really staying true to your rules and following your plan. That's all internal stuff, and that's really what we're going to cover in this video. There's a lot of things that people don't understand or are not aware of, that it takes both parts. You have to have the outer game and the inner game to be successful. I mean, imagine Michael Jordan, if he played a fantastic basketball, but when he missed the shot, because he did miss some shots, if he missed the shot, if he was just broken down and sad and upset, what would have happened to his basketball career? He probably wouldn't have had one. So having both the external or the outer game and the inner game is very important. So let's take a look at mistake number 1, which is having a short-term perspective. Now, this is a huge problem as far as trading goes, when you just see things from the shorter term. Because when you see things from a shorter term perspective, you're only seeing it right here, very close to your face. You're seeing it in micro movements on the charts. You're trying to trade very quickly, and you don't see the bigger picture. You don't see the bigger picture of how to execute that trade and hold on to it. You don't have the patience, the discipline, right? You're looking at things just to make a quick dollar. That's that inner game that's playing against you. Yeah, I want to make quick bucks. Yeah, I want to compound my money, or I don't want to hold it for an extended period of time because there's overnight risk. But that's just seeing things from the shorter perspective. Look at the bigger picture. How do you grow a business in a long term? You want repeatable customers. Same thing. You want repeatable, successful trades. The bigger picture, the longer term, seeing the longer perspective. If you can allow a stock to run for weeks, months, or years, you pretty much don't even have to trade. You can sit on that trade and allow it to run. Look at some of the most successful investors and traders. Are they really the ones hopping in and out, every single day? No. They're usually the ones being more patient, like Warren Buffett, sitting on those trades, allowing them to work and run for you. So don't just look at things just from that shorter term perspective. Look at the bigger, longer term view. What's going to happen in, if you're looking at things just on a day-to-day basis mostly, look at what's going to happen next week. How about next month? How about a year, 5 years, 10 years, 20 years? Stretch your mind. The more that you can stretch this perspective, the better you'll be able to see kind of the future. That's what it allows you to do. And with your investing, that's what it comes down to. Mistake number 2 is societal programming. And I love talking about the programming that happens from us, from society, because this really plays a huge role in many traders' lives. As you start looking at the world around you and you start looking at how we're influenced on a day-to-day basis from society, whether that's through social media, whether that's through the news that's being shown, or even just the environment, your neighbors, the way people behave, interact. I remember that when you used to attend a dinner, you would focus on that other person. And nowadays, many people, as they attend dinners, they're on their cell phone, they're texting with other people, and they're having all this micro time with a lot of other people, but it's not that one-on-one true connection. And this slowly creates a programming effect in you as well. As you choose trades, you want quick trades. You want to trade quickly, right? The short term. As you start getting into trades, the social media aspect of it also starts rubbing off on you, which trades you should go into. You should do this, you should do that, buy the dip here, or this stock is going to sell off forever. We're in a big bubble. All these things start to create this programming mindset. And not to mention, you also get that subliminal effect from all these sources. You also get the programming that has happened to you when you were younger. So if your parents were talking about, stock trading and investors like they were crooks or that's gambling, that's usually because they don't understand what's going on underneath the surface. But all these words could have a huge impact on you. So as you approach trades, it may be a very negative way that you're starting to look at trades and investing simply because of the programming that has taken place. Mistake number 3 is wearing rose-colored glasses. And if you've never heard this term before, it's basically like putting on glasses over your face, right? If I put on glasses and now all of a sudden everything is just beautiful. By the way, these glasses block out the light here on the screens, so it keeps your eyes safe. But in either case, if you look at things now with these rose-colored glasses or these amazing glasses, and you start evaluating things and you believe everything that's said, from the CEO to the analyst to anybody who goes on TV to people on the social media networks, you start believing these things, then you're wearing those rose-colored glasses, that everything is great, everything is blooming, everything is beautiful, the market's great, it's going to always go up forever. Then probably you have not experienced a bearish market. You probably haven't experienced major loss. Now, you may be doing well for 5 years, 10 years. It could be a 20-year bull market. I don't know how the market's going to behave, but eventually those things do catch up to you, and it can be a very problematic situation when it comes to your investing. And if you don't understand this, and you're wearing rose-colored glasses, and you're seeing everything as picture perfect, then be careful for the ride that's going to come in the future. It's a huge mistake that many traders make because they believe that everything's fine. Everything's going to be fine. Everything's always going to go up. I'm always going to make money, or I can just keep buying the dip. The fact is yeah, in general, stock prices do go up. In general, yes, you want appreciation. And most of the time, the government and the world is trying to make things in the world a better place to live. But the reality is once panic sets in, once chaos sets in, your emotions start to tumble. And if you're looking at your account from a $500,000 account, now it's a $20,000 account, those emotions can be very serious, and it can cause you to get out of trades a lot sooner than you should, or, make the wrong trading decisions. So don't always be naive to things and thinking and believing that everything's great, or believing what somebody says on TV. Because a lot of times those TV or news analysts, they might be telling you, hey, get in this stock. And the reason they tell you is because they're looking to dump the shares to you, because they're trying to get out of the position and they just have a large position. So it's important that you're not naive to believe everything that's being said, including what I say. Do your own research, do your own homework, figure out what's right for you, and make your own trading decisions. Mistake number 4. Emotionally tied to a stock. And this is one of the most common inner game problems that I see with traders. This happens really often when you have a popular company, like an Apple, a GoPro, a Netflix, a Twitter, it might be a Snapchat, a Twilio. People get too tied to their own personal lives. I've mentioned in one of my other videos, talking about emotionally tied to a stock, that people get tied to these phone products, and you get tied to other companies simply because you're using those companies' products. You're connected to those companies. Whereas for me, when I'm looking at a stock, when I'm looking at an investment, when I'm looking for a trade, I don't really care if they make a fancy phone. I don't care if they make a fancy screwdriver. I don't care if they sell, toilet paper. It really doesn't matter to me. What I care about is the movement of that stock. I care about how strong is that stock. Is it a good investment? Is it going to behave the way that I want it to? Is it a strong behavior? Does it have the price action? Does it have the volume behind it to support it? How's it holding up? That's what I care about. I care about looking at the stocks that are going to move the fastest in the shortest amount of time. Are they strong? Are they a leading company or a leader in the marketplace? Because that's what you want. You want stocks that are going to move the fastest in the shortest amount of time with nice stability if things go wrong. So if you're tied to a stock emotionally and it starts to go against you, and you just say, oh, well, I don't want to sell. I love their product. Oh, it's just so good. And then you start using their product on a day-to-day basis. Well, I'm losing about $5,000 on the investment, but I still think it'll be fine. And eventually it goes lower. And you still start negotiating with yourself. And then eventually it goes lower and lower and lower. And you still negotiate with yourself up until the point where you just say, I can't handle this anymore. I need to get out of it. And then finally it starts reversing. It's an interesting way that things play on our psychology, but that's the way it happens. It's because you're initially emotionally tied to that stock, negotiating with yourself. Mistake number 5 is the lack of patience. And this happens in part due to societal programming, as we've discussed before. A lot of things in society these days are looked at from a micro view, right? We're looking at short-term, quick, microwave society. Everything is fast. You want it yesterday. And we aren't trained to build our social muscle, our focus muscle. We aren't trained to build our patience. We're looking for the quick approach, the microwave society. We're not looking at the crock pot, the slow cooker way. And investing, it's about slow cooking. It's about doing it for years on years consistently, whether it's doing it years on years, making trades month after month, week after week, but it's doing it for the long haul. For many people, they don't have the patience because they don't have a stretched focus muscle. Their focus is maybe attention span 5 minutes, 7 minutes, 3 minutes, depends, right? We're on social media, that trains us to be a little quicker. We want a microwave, that trains us to be a little quicker. Debit card, we're standing in a checkout line, we want to go through the checkout line much faster. All these things do not help our patience, right? So for you, as you're looking to get into trades, it's probably going to impact you from that programming that happens. If you don't have the patience to be in the trade, get in the trade, or wait for a trade setup, it's going to be a big problem for you in trading. So one of the first main issues is, let's say, choosing a trade. You have to do your research. So you have to be patient to choose the right stocks. Sometimes it takes a couple days to find the right investment vehicles. If you're good, if you're not very good at it, it may take you a few months. Then when you get into that trade, it's not going to explode right away to the moon the second you push the buy button. You have to be patient. Allow that stock to pick up more movement, momentum. Sometimes it takes a few minutes, sometimes it takes a few hours, sometimes it takes a few days or weeks. Again, being patient, right? You're letting things work for you. And even if it starts moving, it won't explode right away in a few days. You know, that acceleration takes place and you have to take profits. So again, being patient to allow it to run and work for you is in a big way part of trading and investing. And many people, they don't have it simply because they haven't worked at stretching their focus muscle, their patience. And if you can do that in your day-to-day life, you'll probably be able to do it in investing. So again, one of the big mistakes is not being patient. And if you have trouble with it, take your hands, duct tape them to your chair, be patient, allow things to set up and work for you. And finally, the last one, mistake number 6, I've covered this one before, is not investing in yourself. It's probably one of the other big problems that many people and many traders make. If you don't invest in yourself, you're not growing, you're not evolving. Invest in yourself, buy yourself a book, buy yourself a video course. You don't have to buy my material, even though I have a bunch of books that you can buy, a bunch of courses that you can buy on the TRADERSFLY.com website. But buy something or read something. Go to the library if you have to and get it for free to check out a book and continue to invest in yourself to make yourself better. Now, investing in yourself doesn't mean just in your education. It could mean also on you psychologically, emotionally. Call up a friend. If you're emotionally struggling with something, right? Emotionally worried about a loss, emotionally just worried about a conversation you had with a friend where there was an argument, just call them up, leave a message, so that way it's off your mental table, it's off your mental desk, right? Invest in yourself by doing things that are physical, right? Drink more water, stretch a little more, spend the first 60 minutes of your day focused on you, whether that's learning something new, whether that's focusing on your health, focusing on your mental and emotional health, right? Reading a few jokes or comedies and things like that to balance out some of the anger, the stresses that you have. Investing in yourself is all just about the quality of life. And for many traders, they look at knowing that or thinking that they already know better. That's just what we normally and naturally believe, is that we already know things way before we know it. So for example, with trading, most people already think they already know how to trade, or hey, I'm good enough to trade. I'm smart. I got these good grades. I know what I'm doing. And what they do is they open up an account. They have some money. You fill out some paperwork, and all of a sudden you take your $10,000 account and it turns into a $7,000 account. Then that $7,000 account turns into a $5,000 account, and so on and so forth. until you recognize you really don't understand what you're doing. And if you're seeing this in yourself, you could have took that $3,000, bought a few books, courses, maybe got a coaching session with someone, and at least had that evaluation of seeing yourself from an outer perspective. Because it's important that you get a real life, an honest approach to seeing what you're doing, how you're doing it, and making adjustments to yourself, because you want to constantly improve. That's the goal. That's the point of investing in yourself. It's for you to get better, whether that's in trading, whether that's in your health, whether that's emotionally, psychologically, all those things. Continue to improve and get better, because if you get better, your trading will also improve. Thanks for joining me in this week's lesson. Hope you found it helpful. If you want to see some of the detailed video courses that I have, or even some of the stock trading and investing books that I've written over the last few years, visit my website at TRADERSFLY.com. Now, if you want to join me on a live webinar class or ask me some Q&A sessions, kind of like a group setting, then join me on a live webinar by clicking the link right here. When you get there, enter your name and email address. You'll be added to the newsletter list, and then I'll send out those newsletters as those sessions come up, along with any promotions and any other future products that I create. Thanks again for joining me. In the end, remember, do what you love, contribute to other people, but most importantly, live life abundantly. I'll see you next time.